William Lee is Chief Economist and Executive Director at the Milken Institute. William, good to have you with us here. Thank you very much for your time. So just two things, actually, just questions off the news flow. One is this, there was some expectation that a Russia-Ukraine deal would be arrived at this weekend. That's not happened. And second is, of course, the tariffs, which have been delayed but not forgotten. So they come into effect from the 2nd of April. Again, I mean, some are reading that to say, well, it kind of throws a lifeline, and that's essentially a negotiating tactic. But as someone from JP Morgan on Friday or Thursday was pointing out to us, the scope of what they are trying to do here is much wider. So, they're not lacking in ambition. So it would be wrong and unwise to say that, they don't want to actually do it and take tariffs up meaningfully. So your thoughts?
I think it's very important to remember that President Trump and this administration has a very different use of tariffs than he did last time. Right now, he is really focusing on a very wide-ranging agenda where he's got domestic economic policy goals as well as foreign policy goals in mind. And the use of a tariff, he's discovered, is a very powerful tool. Not only does it allow the United States to shift spending and shift the relative prices of certain key industries like steel and aluminum so that he can try to increase the production of steel and aluminum in the United States. But he's also discovering that the use of tariffs can bring our allies to the bargaining table and get serious about immigration policies, the shutting down the border and shutting off the illicit flow of illicit drugs, the rush of immigration that has invaded our country, illegal immigration, and also looking abroad for the rest of the world. Tariffs are also becoming a very important part of his negotiating tactic to try to get people to say, live up to your promises. To Europe, he said, you promised to have expenditures, military expenditures increased to defend yourselves and not just rely on the United States. So far, you haven't done anything. You have instead kept us out of the European market with a lot of different tariffs and trade quotas and other restrictions and tax policies, regulatory policies. So let's get down and be serious. And that's what I think the use of tariffs is doing to achieve both economic goals of trying to maximize the amount of domestic employment in high-paying industries and increase the production capacity of strategic industries, but around the world to get people to live up to their end of the bargain and to come to the bargaining table seriously.
William, hi. Great to have you on the show this morning. Just your thoughts on, the intrinsic strength that we're seeing in some of the large Asian economies. When Japan's numbers, again this morning, Q4 numbers looking very, very strong on the GDP. And also China. Is something improving? The reason I ask is that if intrinsically these economies are strong, Japan is, we know, but this is more a question on China, then maybe these economies can withstand any kind of tariff heat, and therefore they will seek or they will find better interest from investors compared to markets like India. So your sense on what's happening in China now?
I think the global reaction, and especially the reaction in China, is that while they recognize it's still very important to stay in the U.S. market because the U.S. market is really the largest market for their exports and probably the most profitable market, they think that it's also important to diversify their sources of demand and improve their domestic economy so that domestic consumption can carry some of the weight of improving growth. As you all know, China's domestic demand is in the doldrums right now, and we've had stimulus package after stimulus package discussed. We've seen the central bank ease interest rates, and yet the domestic economy is not there. And as a U.S. trained economist and as someone who's studied, anyone who's studied U.S. history should realize that we in the 1930s tried that supply side approach that President Xi is trying right now. The strategy of improving wages, improving production, making certain industries more efficient. It's really great to increase the paycheck of workers, but if the workers are saving that paycheck because they're concerned that their children are not getting jobs after graduating college, their wealth in the housing market, which is 70% of the household balance sheet, has gone down the toilet and shows no sign of reviving. If the main breadwinner, even the civil service breadwinner, is finding his salaries reduced, or laid off if you're over 35 because you're considered too old and too expensive. In those sort of situations, supply side economics doesn't work. Say's law that supply creates its own demand does not work. John Maynard Keynes in 1930 said you have to increase aggregate demand to get the economy out of doldrums. And China has not been willing to do that because President Xi doesn't believe that any kind of transfer of households is good because it promotes laziness.
All right, very quickly, William, before we let you go, the dollar index has cooled off from an India market perspective. We are quite happy about that. Do you think it's just temporary in nature? Because when President Trump took office, a few years ago, at that point of time as well, we saw the dollar peaking out, and from there it did correct. So do you think this happens again? Or do you think it's just taking a bit of a breather and then it'll strengthen from here on?
That's a great question. You need to understand why it is that the dollar is strengthening. Because with Donald Trump coming into office, global investors are seeing the U.S. as not only a good place to invest, but also a safe place to invest. So the U.S. has been the source of innovation in artificial intelligence and other high-tech industries. And if you look around the world for investment opportunities, notwithstanding what you just said earlier about how European markets and Asian markets are starting to do better, for the longest time, the longest consistent winning record has been investing in the United States. And that has been the source of dollar strength, and I suspect that'll continue.
All right, William, it's a good conversation, as always. Thank you very much for joining us here.